Hey guys, okay, so I have GDAX up in the background here. I'm gonna just try to explain some of the most basic things. This is kind of basically supposed to be for someone who isn't is very new to this, and um, so I'm just really going to be covering some of the very basics here. Move my camera down just a little bit. Anyway, so uh, yeah, let's just go over the very basics. So right here in the very top of GDAX, okay, just to explain again what GDAX is, it's basically kind of like oftentimes uh, told, explained, or basically it's a back end of Coinbase is one way to think of it, where it's a little bit more of an accurate manual way of trading. It is a lot more, it is closer to what most people trade if they're day traders or whatnot, and they're actively managing their own accounts. This is what a lot of times their interface would look like. I think Coinbase is a great start, but it is a lot less informational than a lot of other places, and I won't get into that. There's a lot of other tools you can use that will give you more information than this, but this is just we're just going to cover the very basics, and I think this is going to be a plenty of a good enough place to start. So let's just say that you have your Coinbase account set up. You just set up your GDAX, and you're looking at this, and you're wondering what the heck this has to do with anything. Like, what are these? What is this right here? What does this represent? This and that, whatever. So let's start. Let's start here with we are currently looking at Bitcoin to the US dollar. USD, of course, means US dollar. BTC, of course, means Bitcoin. And the current price on Coinbase, the current for one Bitcoin is $14,799. It's obviously changing very quick. That was the last, literally what it says here. It's the last trade price. That's what Bitcoin was last traded for. That is how you know what Bitcoin is worth right now, is this price right here. And you can obviously look right here and see that in the last 24 hours, it is down $5%, much more than $5, 5%. And you can also look here at the 24-hour volume in the last day, how much Bitcoin was bought and sold. 42,922 Bitcoin. So I will not get into what these things mean, implications of a higher or lower volume. I'm going to try to stick to the basics, and I'm reminding myself of that as I do this. That is hopefully fairly straightforward. Hopefully I will make all of this very straightforward. But at the same time, I understand if no one has explained this to you, it is understandable that it will not make sense, but really all of this stuff is simple once you get it, like most things. Anyway, so let's go to the next most basic thing, in my opinion, which is this right here. This is basically representing, it is a graph like you might quite well understand, representing time going from left to right. This is where we are right now. And you can see that, this is obviously 10 o'clock. December, we started a new day here, December 9th, 2 a.m., 4 a.m., 6 a.m., 8 a.m., 10 a.m., and our current time. Obviously, the price is over here on the right, and yeah, time and price, and yeah. So basically, this is representing how much a Bitcoin was. What was the last trade price at this particular time? And you can see that as time was going forward, the price was going down. It started going up, and then it went down again. And now it's slightly going up. Okay, that is probably blatantly obvious. So here is, you can see it says candle. What is a candle? Here is one of these. Each one of these is called a candle or a candlestick. And I think it'll let me change it. You can also change it. You can also look at this, which is a line graph, obviously, of the same amount of information. I like candles. Most people look at candles because they actually give you a little bit more information than a line, and I will try to explain that. But just to cover this again, so each one of these is a candle. Each candle represents a 15 minutes in time because we have this set to 15 minutes. We could change it to 1 hour, for example. And when we do that, each one of these represents 1 hour in time. Anyway, so 1 hour, and okay, let's get into the colors. Why are some of these red and some of these green? Green means that the price ended in this 1 hour of time. This 1 hour candlestick, the price ended higher than it started. That's all the green means. Started here, ended here, started here, ended here, started here, ended here. And obviously, if it didn't end higher, it ended lower. And the red means that the price ended lower. So you can say that the price, the price ended, so it started here, ended here, started here, ended here. This one's green. So it started here, ended here, started here, ended here. So the solid represents where the price at the beginning of the hour, because it's in a 1 hour time, where at the beginning of the hour, the price was lower and it ended higher. And that's what the solid represents. It's where it starts and ends at the hour. It started here, ended here, started here, ended here, started here, ended here. Now, these crazy little lines right here are called wicks. This kind of makes sense. Candlestick or a candle. This is called a candle wick, candlestick wick, just like a candle has. And basically, so this is saying, since it's red, and the solid means that it started at the top and ended at the bottom. We don't have a good way of representing what also happened in that time if we didn't have a candle wick. And so basically what this means is within this 1 hour of time we had a very volatile, which just means the price goes up and down. It's a subjective term. It just means it went up and down a lot. Something that's volatile goes up and down a lot in trading terms. So that means that we started here somewhere in this hour. It went all the flipping way up here, all the flipping way down here, and it ended that hour right here, relatively close to where it started, but below it. And then boom, in that time between this one, where this one ended and this one started, it actually jumped. No, it didn't jump. It started right here, and then somewhere in this hour went all the way down to here, all the way up to here, but it ended higher than it started right here. Hopefully that makes some amount of sense. And that's just explaining what happened along all of this time in this particular hour, what happened to the price and whatnot. So let's go down, since we're up here. Let's talk about what in the world are these bars down here. What's the significance and meaning behind these? So basically, each one of these represents volume. Volume it's the same thing that this is saying. This is 24-hour volume. Each one of these represents the volume in 1 hour, because that's what we have here. If we change it to 5 minutes, for example, they represent the volume in 5 minutes, just like each one of these candles represents 5 minutes of time. So obviously, this doesn't, as far as I know, really explain exactly how much volume in each time, because it does not have a key or something on the side showing exactly what the height means. But you can really compare to itself here, showing that it is higher volume here than here. And volume again is the amount of Bitcoin that was traded in that particular amount of time in this 15 minutes. More was traded than here, and in this 15 minutes right here, a ton more was traded than all this time here. And that's basically volume, and you can make basic conclusions on that. Basically, as price was coming down right here, when it got below this, people were very, very interested. Why they were interested, you can make your own conclusions, but basically you could possibly conclude that when it got the price got this low, there was people that were watching it this whole time that then boom wanted to get involved and really push that price back up, and you can make conclusions from that. The volume in general is a way of putting certainty and knowing how much you should pay attention to any individual wick. I'm trying to not get too much into strategy and your conclusions from these charts, and more about what these charts literally mean absolutely. So I will slow myself down on that. But basically, yeah, each one of these represents volume. Okay, so now we get to this crazy thing right here. Um, this middle is the current mid price. It is the middle of what people are wanting to buy for and what they are willing to sell for. It is this little gap right here. The green represents people buying. The red represents people wanting to sell. I should say the green represents people wanting to sell and at their price. And sorry, I said that wrong. I'm sorry. The green represents people wanting to buy and at what particular price. And the orange represents people wanting to sell at a particular price. And even more accurately, it doesn't represent people. It represents the amount of Bitcoin literally set in a limit order over here at a particular price. So basically, people have Bitcoin sitting out there saying, if the price gets down to here, I'm going to sell this much Bitcoin at 14,500. So as the price goes lower, I'm mixing up buy and sell, and as the price goes lower, people want to buy more. There's more people that want to buy at a lower price, more Bitcoin that wants to be purchased at a lower price. The lower you go, the more people are willing to buy more Bitcoin. At the higher you go, the more Bitcoin is willing to be sold. And I think that makes sense. Most people, everyone wants to buy low, sell high. As the price goes up, it makes sense that people have orders sitting out there willing to sell at a higher price. Like right here is 16,100. There's a lot. As the graph goes up, that represents more volume, and you can literally see the volume here. So like leaving it right here, for example, that at 15,800 USD, there are 1,288 Bitcoin waiting to be sold. There's 1,300 Bitcoin right now that people would love to sell, and if you could give them, if you wanted to buy it, they would be like, yeah, let's do it. Essentially, that's essentially what it means. And it makes sense that if you look right here, for example, there's only 114. The width of the bottom to the top here represents a visual of the number of Bitcoin. Obviously, as you go from left to right here, you can see there's 62 Bitcoin willing to be sold, just slightly above the current price. But if you go up here, there's 1,283 Bitcoin that are willing to be sold at that price. And similarly, right next to the current price, there's only 10 or 11 Bitcoin that are willing to be bought at that price. As you go away from the price, there's 1,510 Bitcoin willing to be bought at 13,500. So this is just a visual representation. You can sometimes make conclusions because sometimes it won't, like this is roughly equal. The people, as you go away from the current price, the amount of Bitcoin willing to be bought is roughly equal to as you go away from the price on the upper side. It's roughly equal to each other. Sometimes you'll have like what a lot of people refer to as a runway, where this will actually, instead of going way up here, it will follow a line like this where it's very, very small. And if you actually zoom in, sometimes it'll become more obvious. But this is actually pretty equal. But basically that just means it looks like the price might go up because there's not a lot of people that really want to sell anywhere close to the current price, and there's tons of people that want to buy. You can make your own conclusions from that. Like I said, I'm going to try not to get into the implications of things, and I'm going to try to stick to what they actually mean of the more objective side of this. And I'm getting distracted already. But yeah, so people wanting to buy as the price goes lower, people wanting to sell as price goes higher, and the amount so realizing these are just the limit orders that are out there, they can change them at any second. So it is the truth of what is out there, but it could change. So just realize that. And then similarly here, so just to go over some basic things you can do. Obviously, you can change the time limit here of each candle. So here's a day. You can put in moving averages here, which are uh, I won't get into those. You can put in a line graph if you want, just a more simplistic view of the price. Um, uh, Going in here, you can zoom in. Obviously, as I click the plus, the price gets closer to the middle here, and you can get more specific on what is actually happening. Like I was saying, as you see a relatively low on one side versus the other, you could argue, or you could imply that there's a likely chance that the price is going to go up or down, because there's a ton of people that want to buy here, and and there's less people that want to sell. It's likely that the price is going to go higher because it's going to be easier. There's less. I don't know. I hope that makes sense. Anyway, but you can zoom in and zoom out with these. Going over here, let's try to explain this. This is basically a numerical accurate representation of what this graph is. This is more of a visual graph, and this is the actual numbers where they're coming from. So basically, you've got, just like green is buy, um, you've got as price is going. Let's make the spread. You can make the spread bigger here, down here at the bottom. Let's make the spread bigger, just maybe things will be more obvious. So as you, and I'll make things move less. So as you go away, as you go below the current prices, you can see these numbers are going lower. There is more people wanting to buy, and more volume associated with them. You have also a little graph right here representing how much Bitcoin is willing to be purchased at that exact price. And as we go up, this is how much people want to sell at this particular price. And so you can look at right now, and it's like I made this $10 at the bottom down here, right here. And so this is representing $10 spread. You can zoom in and make it smaller than that. So between 1475 and the current price, there's 3.3 Bitcoins that are wanting to be sold. And between the current price and $10 below, there's approximately 2.4 Bitcoins wanting to be bought. And so these two people, or these two prices, are hashing it out right now. And the prices, of course, could represent many people selling a very small portion of Bitcoin. And then, you can see like price movement going on here. Hopefully this makes sense. This is just showing how much Bitcoin is wanting to be sold at this exact within this spread of price of $10, and this is how much wants to be bought within these prices, between the difference of these two prices as you go down. This is the USD spread is a penny. That means that the prices vary. The people wanting to sell and the people wanting to buy are off by 1 penny. When that price meets, boom, this price changes, and we have a new last trade price. So you can see the spread sometimes is big, sometimes is small. Just simply how close the buy and sell is to meeting itself and making a sale. Let me see here. What's over here is basically the representation of what has actually happened in the past. And over right here, we've got the time, and we've got how much at that time was bought or sold, and that's pretty much what it represents. So as I was saying, this does represent limit orders, what Bitcoin is sitting out there willing to be bought or sold at what price and how much of it. They can move around the last second, and although this represents what is, it doesn't mean what will be when the price gets down there. For example, this is actually what has happened. This is all now in the past, and so you can put a lot of weight on this, where certain amounts are being bought or sold, and how much, and that's just simply what this represents. Okay, so that is basically the very rough understanding of what this stuff means. I'm not getting into what a market order is, a limit order, how to set stops, for example. I want to get that into a separate video. I think this one probably, if this was new to you, this was probably complicated enough. And anyway, another thing I just want to talk about on the same thing is Investopedia. If you, of course, for understanding charting and whatnot, there is Google, there is YouTube, there's amazing resources out there. One of them is Investopedia. It is kind of the quintessential resource for most traders to go to. It's kind of almost oftentimes the objective standard for how to interpret a certain things, what something is actually called, what is what is going to be widely understood when you're talking about something. This is a great resource. How to interpret something in like it's almost like a classroom of sorts on. It's an amazing resource. So the amount of stuff you can learn here is almost unending. But this is just to have this pulled up to what is a candlestick. And you can read about candlesticks and click on more links having to do with all kinds of more information, and you can just go in and go crazy. But I just wanted to point out this resource, and if you're Googling, you're probably going to end up there inevitably. That's a good something to look at to try to understand things well. I think they do a pretty good job in general of explaining things. Anyway, if this was helpful, please give it a thumbs up. Subscribe if you think this would be helpful to other people. Feel free to share. Yeah, I want to continue to post these things. As people ask me questions, it helps me understand what I might be able to explain to others. I've had a lot of friends that are new to this and are asking me what in the wide world this means, and hopefully this is something I can share with them and it'll be helpful to you as well. Anyway, thanks for watching. Hope you have a great day. Good luck with your trading. And if you are getting into crypto, the best of luck to you. I think this is an exciting time. Yeah, it's a good time to get in still, I think.